Welcome back to our weekly market recap. This week, an attacker linked to North Korea minted fake Ethereum tokens out of thin air and triggered $12 billion of outflows from the largest DeFi lender in the world. So unfortunately, that's the second nine-figure hack in 3 weeks. Over $500 million stolen from DeFi in April alone. And what is Bitcoin doing? It barely moved. It's actually up on the week. Semis broke out to new highs. Strategy ripped 50% of the lows. High beta is leading low wall by the widest margin of the cycle. So something important is happening in this market, and the crypto hack story is the perfect lens to understand it. So let me walk you through the charts as always. So let me start with the S&P 500 futures, because this chart tells you everything you need to know about the regime we are in. So back in March, we had what looked like a legitimate topping pattern. Price rolled over. We broke the prior range. Sentiment got ugly, and a lot of people started calling for the end of the cycle. And then something important happened. We bottomed here around the 6,350 mark in April, reclaimed now 6,800 level. And in the last 2 weeks, we have punched through to new all-time highs above 7,140, now consolidating. And that is not a distribution pattern. That is a failed breakdown that turned into momentum thrust higher. So in my framework, failed moves lead to fast moves. You break a level, you get all the bears leaning in, positioning gets short, and then price reverses and runs over everyone who was positioned for the breakdown. And that is what just happened in the index. And it's not just the index. Look at the ratio of high beta stocks to low wall stocks, and this ratio is at the highs of the cycle. It pushed above the 1.80 mark this week. So when high beta is leading low wall by this much, that is textbook risk on behavior. So investors are not hiding in defensives, they are reaching for risk. Speaking of risk, the semiconductors, the SMH, the VanEck Semiconductor ETF, fresh all-time highs. The semis were one of the big losers in February drawdown. So they have now put, where I have it, 30% year to date, over 1 year, 140%. That's brutal. That's a vertical breakout here. Fresh highs, leadership reasserted. So if you're bearish on the market and semis are ripping, you have a problem with your thesis. And I want to be clear about what I am seeing here. New highs, broadening leadership, and a clean break of prior resistance on heavy volume. So this is a bull market signature, not a topping signature. Also, commodities. Yeah. Because this fits the thesis, that's DBC here, ETF, fresh, multi-year high. This thing has been in a persistent uptrend since July 2025. Commodities at highs, while equities are at highs, and high beta is leading, is the definition of a reflationary risk-on late cycle regime. And it fits everything we have been writing about in our 60/40 paper. We can link that again in the show notes. Scarcity assets are working, real things are working. And yeah, this is what fiscal dominance looks like on the tape. And also 5-year break-even inflation rate, that's not a topping structure, that's a bottoming structure on the way up. So get used to higher inflation, in my opinion. Now let me turn to crypto, because this is where the story gets interesting and where I think we are entering another meaningful up leg. So here was from our sentiment index, the heat index, our buy here on March 11. You also see we have broken the high from March 2024. We are now above that, and our own trend indicator also signaled along. And I like that if you have from several angles a buy signal. So that's pretty strong. However, the rally overall in crypto is concentrated more on the larger cap tokens. You also have a nice pattern here, but we have to break through decisively in Ethereum. And Solana is still weaker here, range bound, no breakout. So it would be important to get over, I would say, the 97 mark to spark a larger altcoin rally. So I like Solana long term, but short term, it is not where the leadership is. Supporting the appetite for risk and crypto is the MicroStrategy or strategy stock now above important levels here. So we are now retesting the support line. It's important that we are holding that, but that speaks for investors seeking leveraged beta long Bitcoin exposure still via the strategy stock. So overall and supporting theme here. Also, if you look at strategy versus the Bitcoin ETF IBIT, we broke out here decisively. So that speaks for this momentum in the Bitcoin ecosystem. Now I have to speak about the DeFi hack and why it matters less than you think. So I need to talk about the KelpDAO hack because it was the biggest story in crypto this week. So quick facts: late Saturday night, an attacker exploited the layer 0 bridge configuration used by KelpDAO, a liquid staking protocol, to mint over 100,000 unbacked liquid staking token in ETH, roughly 18% of circulating supply. They then deposited the fake ETH as collateral on Aave and borrowed around $190 million in ETH against it. So that's the second 9-figure DeFi hack in 3 weeks. After Drift lost almost 300 million on April 1st, I guess, if I'm not mistaken. So over $500 million exploited this month, and the attacker is reportedly linked to North Korea's Lazarus Group, as usual. So Aave here, loser, froze the markets, which trapped around $8 billion of lender capital in the protocol. And we also have a coordinated industry rescue, but overall, of course, not good for DeFi. Now, I have seen the takes that this is a chance for DeFi to improve. And yes, the industry response has been impressive, but I want to be honest about what I actually think. 5 years into the cycle, we are still talking about exploited bridges, still talking about bridge message verification going wrong, still talking about risk teams that did not audit the configuration before listing the collateral. And if you are a large TradFi bank, considering whether to build meaningful infrastructure on top of DeFi rails, I think this week gave you 0 new reasons to move forward and a fresh reason to stay in the prototype phase. And honestly, rightfully so. And we are still experimenting. We are still, I would call, in a beta phase. So the idea that DeFi is ready to replace or seriously compete with traditional finance rails at scale, I think is not supported by what we keep seeing here. So that said, and this is the important part for the trade, I do not think this hack changes the crypto thesis. Bitcoin does not care about Aave TVL. Ethereum, the asset, is a different thing from an liquid staking token. So the broad crypto market has digested this news and kept trading well. So if anything, the capital rotating from Aave to other protocols is evidence that the ecosystem can absorb these events now without cascading everywhere. So think of it, 5 years ago, this would have been a 30% drawdown event overall. And this week, Bitcoin and ETH barely move on the news. So that is maturity, not the maturity I want to see in smart contract security, but maturity in how the asset class trades. So let me wrap up with the big picture. So my thesis for this week is the same as last week, just with more confirmation. We are in a bull market continuation, not the end of a cycle, and yet the mood is still cautious. That is the tell. Markets do not top when everyone is skeptical. Markets top when everyone is long, leveraged, and certain. And I think we are nowhere near that. We are still in the phase where every leg higher is met with, this is the last rally before the real crash. And that is exactly the environment where I want to stay constructive. So if you found this useful, like, subscribe, share it with someone who is still positioned for the February lows, and I will see you next week. Happy weekend.